Welcome and thanks for joining us on Real Investment News for your mid-morning market report. I'm your host, Scarlett Vicar. Right now, the Dow is up 17 points, S&P 500 up about 4, NASDAQ up 24. Looks like oil is up 55 cents at $57.90 a barrel, and gold is down 10 to $12.45.10 an ounce. Oil prices did edge higher today after positive economic data helped to raise expectations for crude demand. On the New York Mercantile Exchange, January West Texas Intermediate crude went up 17 cents to $57.53 a barrel after losing roughly 1.7% last week. Brent crude, the global benchmark of course, rose 58 cents to $63.98 a barrel. According to MarketWatch sources, the market is fearing an increase in crude production, particularly from shale from countries that aren't part of the Organization of the Petroleum Exporting Countries. Overall, oil prices have risen by around 30% over the past 6 months. Ahead of the Fed decision this week, the ICE U.S. dollar index fell 0.2% to 93.74, helping to boost demand for gold. The probability of the Fed hiking rates on Wednesday stands at 90.2%, according to CME's FedWatch tool. According to MarketWatch, most economists predict a big increase in retail sales in November. Sales tracker Redbook reported that sales at stores open at least 1 year jumped almost 5% in the last week of the month, marking one of the biggest gains in 20 years. And inflation is expected to increase in November, mainly due to a rise in gasoline prices. Data released today showed that the number of U.S. job openings slipped to under 6 million in October, but that was from a record 6.18 million in the prior month. Hiring rose to 5.55 million, or 3.8%. 3.18 million Americans quit their jobs, which is in line with previous numbers, and layoffs dropped to 1.63 million in October from 1.75 million the prior month. In the 12 months through October, the economy created a net 2.1 million jobs, representing 64.3 million hires and 2.2 million separations. And that is your mid-morning market report. We hope you found that useful. Go to Facebook, like us on Twitter. We've got all of our reports up there waiting for you to watch and review. We'll have another one coming up in the next couple of hours.